Advanced Micro Devices shares are selling off after the company announced their Q4 earnings. We'll go into some of the high-level stuff, some of the stuff that we should be positive about when it comes to AMD. We'll take a look at the gross margins. Take a look at the segment revenue as well. You got all-important data center. Are they making progress in the data center against companies like NVIDIA? Take a look at the client computing, the bread and butter. It used to be the bread and butter of this company's business. How did that hold up? How does that carry over to other semiconductor companies, including Intel? Look at the rest of the business as well. We'll look at all of the numbers from a high level. Company did a very nice job controlling costs in the most recent quarter, and we'll look at profits. We'll look at the balance sheet. We'll look at inventories over here as well. And oh my goodness, we got to look at this one technically. During the regular trade, you're up about 4.5% in the after hours. This thing was up. It's down. It's down about 3% in the after hours. We are approaching two critical areas with AMD. If you want to buy the dip on AMD, there are two levels. You'll notice if you're a fan of the program, I put these green boxes on stocks. These are areas where you want to buy. We'll talk about the two areas that we're approaching. If you breach those levels, oh my goodness, hopefully you got a stop loss or you don't mind seeing some red on your account because it could get worse with AMD. What is going on, investors? Hopefully you guys are doing well out there. AMD over the past year actually is down 31%, and year to date, you're down about 1%. Shares were doing well today, but after the company announced the Q4 earnings, we're seeing them reverse in the after hours. Revenue came in at about $7.7 billion in the most recent quarter. Now, the expectations over on Wall Street was a number closer to about $7.5 billion. In fact, the high-end estimate was right at about $7.7 billion. So AMD actually putting up very solid results in the most recent quarter. Now, they also gave us guidance for the upcoming quarter, the first quarter. Revenue expected to be between 7.1 plus or minus 300 million. They kind of give you this plus or minus thing over at AMD. So it could be as high as 7.4 billion, could be as low as $6.8 billion. Typically, when the company gives you the 7.1, Wall Street kind of interprets that as that's like the baseline, and the 7.4 potentially as high as maybe 7.5 could be the high end. So when you look to the next quarter, Wall Street was, I say only, expecting about $7 billion or 27% growth, and the high end estimate was for 7.5. So the company, if they come towards the high end and maybe even beat their high end expectations, well, they're certainly coming to the high end expectation or the high end range of their guidance. This is all good for AMD because what it does is it gives us confidence as we move into Q2, Q3 later this year. They're only projected about $7.5 billion worth of revenue for the second quarter. Well, if they are projecting $7.1 billion this next quarter, well, you got to imagine the subsequent quarters are going to be pretty good as well. So that's all good news for AMD. Also, very good news for the company. Gross margins in the most recent quarter. I am looking at this on a GAAP perspective. You guys want to strip out non-GAAP, you go ahead. I don't really do that. 51% growth margins. Really, the difference is you have to look year over year. It was 47% last year. So doing a nice job, or excuse me, that was just last quarter. It was 47% last year. It was 50. So you're up on the gross margins year over year. We'll see that when we get over to the financials as well. Operating margins, which is basically your profit margin, 11%. This is all great. Last quarter, it was 6%. Last year, it was 11%. So all good there. Now, from the segments that AMD operates, first of all, you have the data center. So this is obviously, as it sounds, it's your data center. Some of this, or a decent amount of this, is some of their MI300 GPUs, which more or less compete with NVIDIA. But you also have some traditional data center kind of CPUs that are making it into the data center. The net revenue, boom, up to $3.9 billion. Last quarter, it was 3.5. Last year, you see how explosive the growth this business unit has been under. It was just $2.3 billion last year. Also very profitable because you are not selling to broke losers or broke college students like maybe your client computing. Sorry, I've just offended half of the audience. But this is sales to rich, wealthy data center companies, Google, Microsoft, Amazon, others out there. Okay, $666 million of operating income, boom, all the way up to $1.2 billion. It was $1 billion last quarter. So they're just tacking on more revenue, tacking on more gross profit. Strengthen the client computing business. This is your bread and butter laptop, PC type of business. 1.4 billion last year, all the way up to 2.3. Last quarter, it was 1.9. So this is fantastic. Look at it. It was a break-even business last year. I mean, they barely squeaked out any operating profits. Now you're all the way up to 446 million. So this is fantastic. The business that has fallen off the map for the company is gaming. You're late in the console cycle. So if you didn't know, AMD's chips go into like the PlayStation and the Xbox. And so they kind of lump this into gaming, and you're obviously late in the cycle when it comes to console type of gaming. Most people have a PlayStation 5 by now. I mean, they're still selling well, but not like what they were a year ago or certainly 2 years ago. You see, look back in 2023, 6.2 billion. This year, 2.6. So obviously, as you move into a new refresh cycle, if AMD wins that business, and I'm pretty sure they are at least potentially on the books for the PlayStation 6 or the next generation console, that will help the company, but obviously you're probably several years away. That business basically printing very little revenue and very little profit at this point. Finally, you have the embedded business for AMD, which is custom silicon. This can be higher end embedded kind of custom silicon, but it also can kind of be mid-tier stuff. Very consistent business. You see quarter over quarter, relatively stable. This comes from the Xilinx acquisition. It also prints decent net income. Okay. Off of this 923, you had 362 in operating income. Okay. That's comparable to the operating income they churned out in client on $2.3 billion. So it's much higher margins because, again, the embedded is not selling to broke losers. They're selling to some of the world's richest companies. So that's AMD's business models, all looking very good. You got some pushes and some pulls. That's typically AMD. That's one of the benefits of AMD, but it's also a challenge. You look at like an NVIDIA. NVIDIA is all in on the data center and AI GPUs. Okay, that business is on fire. So the stock has done well over the past year, 2 years, 3 years, 4 years. AMD is much more diversified. So as one business goes down, like gaming and maybe client, data center is going up. And so the company can never probably be firing on all cylinders. So it's just something that you want to keep in mind as an investor. Now, over the last year, company's done a very nice job. Look at your research and development year over year, ticking up a little bit, but quarter over quarter, basically flat. Your marketing, general, administrative, also very much in line. Something that showed up in the most recent quarter was some restructuring charges at about $186 million. So you take this 871, we'll add this back when we get to cash flows, but this 871 million, way over and above where they were last year at just 342 and way over the previous quarter, or a lot over the previous quarter. We were at 724. Keep in mind the 186, not related to the business or operating the business. They do have to recognize it here. So this number would have been even better. Also, your net income at 482 would have been a little bit better as well. They also had to pay some taxes where they had benefits in previous quarters. So that impacts your EPS, impacts your net income. It looks lower than it is lower than the previous year and the previous quarters. But again, some of that has to do with restructuring. Some of it has to do with this income tax provision. Now, from a balance sheet perspective, I do see a somewhat elevated inventories, 4.3 billion up to 5.7. Not the worst thing. If it's data center inventory, kind of sucks if it's gaming inventory. So we'll see how the company is able to shake that out. Although we saw in the most recent quarter, gross margins tick up. So I think they probably have a good inventory mix over at AMD. Very healthy from a balance sheet perspective. This is not Intel, okay? They have very little long-term debt. In fact, they've whittled this down since the Xilinx acquisition. I think they tacked on some debt, but they've done a very nice job just whittling that down. Very financially responsible company over at AMD. Now, operating cash flows in the most recent quarter look particularly good at about $1.3 billion last year. It was just 381 year over year. You went from 1.7 up to $3 billion. Obviously, the higher the number, the better when we're talking about operating cash flow here. Now, the operating cash flow was benefited by stuff that you don't normally get super excited about. Some accrued and other liabilities turned positive. You also had some prepaid expenses and other assets also tick up, which benefited this higher than kind of normal cash flow, or at least over and above where you were a year ago. Now, good news is this company's not trying to build fabs, okay? They're not trying to build a fab. And so that's great. You don't have to spend much of this operating cash flow on anything. They did spend about $208 million on property, plant, and equipment in the most recent quarter. So what are they doing with the excess cash? They're continuing to repurchase stock. Over the last year, they repaid about $750 million worth of debt, and that's what they're doing with the cash over at AMD. Things look pretty good financially. Now, in the after hours, I'm seeing the sell-off get worse, and that's probably not a good thing. This blue line here, this kind of solid blue line, this is a 200-day exponential moving average. When you approach this blue line, it can serve as an area of support. And I am seeing we are kind of slicing through that. You also don't like to see, at least technically, kind of a rounding out and then a downward spike in this moving average. Anytime you start moving down in this thing, it's been a while since you've had a reversal in this stock, but anytime you start to roll over the 200-day moving average, you can have a dramatic drop like we did back in 08, 09, although some of that was kind of great financial crisis related. Maybe that's coming down the pike. Who knows? But technically, it's actually not that great over at AMD. You've just more recently made a high, a lower series of highs confirmed by a lower set of lows. In the micro trend, really since February, you have been in a downtrend. And this is going back to February of last year. So we're on a weekly chart. So for a year, AMD stock has been in a downtrend. You are now testing the 200-day moving average. You would not want that moving average to move lower. If it does, there's an area that I've marked out here should be support at about $94, $95 per share. So I wouldn't blame anybody if you like AMD, you like the product mix, you like maybe the tailwinds of the business, the client business coming back, potentially Intel maybe getting broken up, and this company may be benefiting from all of that. Well, this area where you're at now, kind of on the high end, as you move closer to 95, those are the areas you buy. Now, if you break through this $95 area, you are testing areas much, much lower, probably in the 70s, $50. And some of you are saying, well, how is that possible? AMD is this great company. Keep in mind, you've got a $193 billion valuation on this one. You had just $3 billion of operating cash flow, and some of it was benefited by kind of non-company related stuff. Just $3 billion, okay, in terms of yearly operating cash flow for the year. The company is not sitting on a boatload of cash, so you can't strip off $20-30 billion of cash. They're sitting on a very modest amount of cash. They have some inventory, but just your total current assets, you want to give them dollar for dollar, is just $20 billion. And again, when we're talking about a $200 billion company, you can say just $20 billion. And then when you look for the full year, you've got $25 billion worth of revenue. So you're trading almost at 10 times sales, a little bit less than that, but you're trading close to 10 times sales. And then when you look at this year, you're probably on a trajectory where you're going to do between 7.5, maybe as high as $9 billion in revenue. So what's that? 30-something billion dollars worth of revenue. That's just not enough for some investors and not enough meat on the bone for a $200 billion company. So there could be potentially much lower areas. If you get into those areas with AMD, obviously makes it much more attractive from an investment standpoint. But we've got some critical areas that need to hold technically. This area where the stock is right now, I'm seeing in the after hours, 113, 114. You need to hit this level and then move higher. If you break through this level, there's an area here at 95, 96, somewhere in that range. That level needs to hold. If you don't hold this level, my goodness, you're probably coming down into the 60s and maybe potentially lower because your moving average will have turned negative. All the technicals will be going against this company, and fundamentally still rather richly valued. Believe it or not, trading at about 34 times on this one. You start lining that up with other semiconductor giants like Broadcom, like Nvidia, which have more revenue, more profits, and potentially more upside. Well, it just shows you that AMD, while it's a great company, great leadership, and it's an excellent stock, it's certainly not cheap from a valuation perspective. Hopefully you guys enjoyed today's video. We'll be back with more. Good luck with your investments.